Hey everyone, welcome back to Corporate Decoder. Today we are diving into the financial world of Store Capital LLC. And while it might sound as exciting as watching paint dry, I promise there's some interesting stuff in here, kind of like finding a $20 bill in an old coat. We'll see what's been going on with this company and what it might mean for the future. So this is an 8K filing, which is basically a quick update a company sends to the Securities and Exchange Commission, or SEC, when something important happens. This particular report is dated March 18, 2025. The company we are looking at is Store Capital LLC. They are registered in Delaware. This section is just checking off boxes to see if this report is also covering some other requirements, but it doesn't seem to be in this case. No need to get bogged down in the technicalities. Okay, now we're getting to the meat of the report. This section is about other events. Specifically, the company issued a press release about pricing their senior notes. Senior notes are essentially bonds a way for the company to borrow money. On March 19, 2025, Store Capital LLC announced they're selling $350 million worth of these notes due in 2030. The interest rate is 5.4%. This is a private offering, meaning they're not selling these notes to the general public, but to specific investors. Basically, they are borrowing a chunk of money and promising to pay it back with interest over the next 5 years. This is how companies raise funds for various activities, such as investments and operations. This part lists the exhibits included with the report. In this case, it's the press release they put out about the senior notes. Exhibit 99.1 is the actual press release about this debt offering. And finally, the signature section, which just confirms that the company is standing behind the information in the report. So what does all this mean? Well, Store Capital is essentially taking on more debt. They're borrowing $350 million and committing to paying it back with a 5.4% interest rate. Now, whether that's a good thing or a bad thing depends on what they plan to do with that money. If they're using it to invest in projects that will generate a higher return than 5.4%, then it could be a smart move. If they're just using it to cover existing debts or expenses, it could be a sign of trouble. It's also important to remember that interest rates can fluctuate, so locking in a 5.4% rate now might seem like a good deal if rates are expected to rise in the future. It is also possible that Store Capital is trying to lock in the most favourable rates before it does rise any higher to lessen the cost for when they pay back the funds. Without more information about their specific plans, it's hard to say for sure whether this debt offering is a positive or negative sign for the company. Okay, so after this quick look, what do we think? First off, Store Capital clearly feels like they can make good use of this $350 million. They must have investments lined up or some other way to generate returns higher than that 5.4% interest rate. If they didn't think they could beat that rate, it would be like throwing money away. Now, a big risk here is whether those investments pay off. If they don't, Store Capital is stuck with a big debt and no way to pay it back. Also, while 5.4% might seem reasonable now, what if interest rates fall in the next few years? Then Store Capital is paying a higher rate than they have to. It's also worth asking if they have any options for repaying the debt earlier or refinancing if the interest rates does become too high. All things considered, this move seems pretty standard for a company like Store Capital. They are in the business of investing in different projects and properties, and to grow they sometimes need to borrow money. The real question is how well they manage that debt and how smart they are with their investments. Thanks for watching. If you found this helpful, please subscribe, like and comment below. Let me know what companies you want me to decode next time.